Hello everyone, this is Mohammed from StarseedFX. Welcome back to the channel. This is session 4 of how to read the market structure training. If you have been following along, that's great. You are building a strong foundation for mastering the market structure. But if you haven't watched the first 3 sessions, I highly recommend you to do so before diving into today's lesson. Those sessions lay the groundwork for what we will cover today. In today's video, we are diving deep into the extreme trading zone, a crucial area where potential change of character or choke happens. Why is this important? Because identifying this zone correctly can give you a powerful edge in understanding market moves and anticipating shifts before they happen. So stick around, grab your chart, and let's break it down step by step. Before we start marking our chart here, let's first understand what is the extreme trading zone. Let's put it in words first. Every trade leaves behind at least one forgotten trading zone, known as the extreme trading zone. This zone forms when the market fails to retrace to the 50% Fibonacci level, leaving it untouched or unmitigated. Before we go to the real chart, let's draw an uptrend structure here, like this. Okay? As I explained in the last video how to use the Fibonacci tool to mark our trading zone and the requirements to confirm our market structure. First, we need to confirm a break of structure. Here we have a break of structure. The confirmation of break of structure means that I have a new higher low. Then as the market going up, we are expecting a valid pullback at this zone. And how to confirm a valid pullback? We mark the recent bullish candle, wait for its low to be broken with a candle body that confirms a valid pullback. And if a valid pullback confirms, that also confirms a new higher high. So here we also have a new higher high. Higher low, higher high. Now it's time to use Fibonacci between the higher low and the higher high to mark our trading zone between the 50% and 100% level of Fibonacci. As you can see here, the market has retraced to our trading zone, which is between 50% and 100% Fibonacci level, and then pushed up again, breaking the higher high. I have the higher high broken. That confirms a new break of structure. That means I have a new market structure. So let's delete the old market structure here and focus on our new market structure. Break of structure confirmed. That means I have new higher high. If I have a valid pullback here, that means I have a new higher high. Between the higher low and higher high, I use Fibonacci tool to mark our trading zone. Let's mark our trading zone between the 50% and 100%. Our trading zone, by the way, is always between the 50% and 100% of Fibonacci. It is a short pullback or a short retracement, as you see here. The market failed to retrace to our trading zone. The market failed to retrace to our trading zone. Until here, everything is good. We still don't have an extreme zone. When this zone will be confirmed as an extreme zone, once the market breaks the higher high with a candle body. A candle close with its body higher than the higher high level confirms a break of structure. So right now, this trading zone become our extreme buy zone. So this zone is my extreme zone only if the price failed to retrace to the 50% level of Fibonacci pull back right above it and break the last higher high. That confirms an extreme trading zone. So again, the extreme trading zone is confirmed as an extreme trading zone only if the market failed to retrace to the 50% Fibonacci level, but instead it retraced above the 50%, breaking the higher high, confirming a new break of structure. That means right now we have a new higher low over here. If I delete this arrow, I delete this circle, I have a new higher low. This trading zone, I will keep it, I will need it later, but right now I have to follow the new market structure from the higher low to the new higher high and mark my new trading zone between the 50% and 100% Fibonacci level, and that's our new structure. So now I have extreme trading zone and have the recent buy zone. I have two trading zone. Okay, now the question is, how are the extreme trading zone and a potential change of character related? The relationship is strong because the potential change of character is positioned below the extreme trading zone. So if the market price broke this zone over here, that will confirm a change of character, and our analysis shifts from bullish to bearish. So the market may continue its pullback movement, touch our recent trading zone, react upward, but fail to break the higher high. Instead, it moves down again. Let's stop here for a second. Here we have a higher low that is broken with the market price. So this break, we call it a minor change of character or minor choke, meaning the market is temporarily moving its momentum from bullish to bearish. Why this is a minor change of character, not a full change of character? Because this is not an extreme zone. Add to that, we have unmitigated trading zone or extreme trading zone that we are expecting the market price to mitigate. So now the market is in our extreme zone. We can look for a buy setup. We see the market moves up. We see if the market breaks the higher high, we have a break of structure. But if the market failed to break the higher high, but instead it break the level of the potential change of character, that means we have a change of character, and we change this sign from a potential change of character to a choke or a change of character. Okay, so now we understand the relation between the extreme trading zone and the potential change of character, and when the price breaking the recent higher low, that confirm just a minor change of character, considering that the market is retracing to reach the extreme trading zone. Now let's move to the chart and learn how to mark our extreme trading zone, our potential change of character. And also we are going to review how to mark our lower high, lower low, potential change of character, minor change of character, break of structure. Okay, so we are going to cover everything related to the market structure and everything we did learn from session 1 until this session. So the trend I have here is a down trend. So how to start looking for my trading zone on a downtrend? On a downtrend, we are using the Fibonacci tool from the lower high to the lower low, marking our trading zone between the 50% and 100% level of Fibonacci. So where is our lower high, lower low leg? In this chart here, the first lower high, lower low leg is here. Why? I have a break of structure here. Why this is confirmed break of structure? Because the lower low is broken with a candle body, not just a candle wick. That confirm what? That confirm a break of structure. How to confirm the new lower high? The new lower high is the highest price during the market retracement. So from the lower low, the market retraces up until the break of structure. This highest price here, the top of this pyramid, is our new lower high. Okay, so we have a break of structure and we have now a new lower high. For a new lower low, we need to confirm a valid pullback. And how to identify or confirm a valid pullback? Find the recent bearish candle and wait for its high to be broken with a candle body that confirms a valid pullback and a new lower low. So in this leg here, the most recent bearish candle is this candle here. I'm marking in green. And why this is the most recent bearish candle? Because it closed with its body lower than the previous candle. That makes it the most recent bearish candle. The following candles here are just wicks. There is no body lower than the low of this candle I'm marking with green. So it remains my most recent bearish candle, and its high here broken with a candle body that confirms lower low or new lower low. So lower high, lower low. Now it's time to use Fibonacci from the lower high to lower low. Mark our trading zone between 50% and 100% of Fibonacci, and the market retraced to our trading zone and again push down, breaking the last lower low. Breaking the last lower low with a candle body, that means we have a new break of structure. New break of structure means we have a new lower high. We already know how to find our new lower high. And then to find our new lower low, look for the most recent bearish candle, confirm its high broken with a candle body. Here is my recent bearish candle, its high broken with a candle body. So we have a new lower low here. Sorry, here. Again, use Fibonacci from the lower high to the lower low. We will see that the pullback is short, did not reach our 50% level of Fibonacci. So this trading zone here will be confirmed as the extreme trading zone only if the market failed to mitigate it and confirm break of structure before touching our 50% level of Fibonacci. And that's what happened. It's a short pullback. Yes, it's a valid pullback, but it is short, lower than the 50%. And the market right away retrace and breaking our lower low with a candle body. In fact, with this candle body, so I have new structure. And don't forget to mark this trading zone as your extreme sell zone. Okay, now we have a new lower high and we have a new lower low down here. Okay, this is our new lower low, and this is our new lower high. Lower high, lower low, again we use Fibonacci from the lower high to the lower low and mark our trading zone between the 100% and the 50%. And this is just a sell zone, or the recent sell zone, or the premium zone. As you can see here, these two zones are back-to-back trading zones, but we have to respect what the market gives to us. We don't know if the market will respect our recent trading zone or will go through to the extreme trading zone, which happened here. The market broke through it, reaching the extreme trading zone. So we delete our trading zone and we delete its Fibonacci to clean our chart. Now the price has reached our extreme trading zone and confirmed a new break of structure here. One thing I forgot to mark, and I'm sorry and I apologize for that. Once we have the extreme trading zone confirmed, we don't forget to mark our potential change of character. It is very important to mark your potential change of character. You don't have to mark it the same way I do, but at least you know that if the market price did not respect your extreme sell zone and broke it, you have a change of character. So you are going to shift your market analysis from bearish to bullish. But in our scenario here, the market price respected our extreme zone and started to move down until it broke our recent lower low, confirming a new break of structure. Okay, so now we know how to mark our market structure before we trade. We know how to mark our lower high, our lower low. We know how to mark or to identify a valid pullback. We know how to confirm a break of structure. We know how to identify our extreme sell zone and our recent sell zone. On top of that, we know how to use the Fibonacci tool to mark our trading zone. But is this the only formation of the extreme trading zone? No, it is not. Along the way, depending on the currency fluctuations and the strength, we may encounter different structures and variations of the extreme trading zones. In our next session, I will explain these variations in more details. That session will also be the final one on market structure. After that, we will begin learning how to trade our zones effectively, starting from the higher time frame and working down to the lower time frame. I wish you all a happy weekend and successful trade. Thank you.